Hello everyone. So today I want us to look at some scalping simple strategy. I've been using the Fibonacci retracement levels and the Fibonacci funds, and based on the feedback I've been getting, it appears that these Fibonacci funds are a bit complex for so many people to understand, and I've also realized that so many people are scalpers. The long-term traders are very, very few. The scalpers are many simply because of scalping. You make money in the short run, and for the long-term traders, you make money in the long run. You're looking at targets which are ranging from 1 week to a month. But a scalper wants his profit this morning, not even today, but this morning. So using these Fibonacci funds, you can have a good scalping strategy. And I'm going to show it to you right now. Scalping is a bit messy, and this strategy is also a bit, it's a bit not so messy, but then it's a bit messy. But there is a very simple way of applying it, and I'm going to show that to you. When you start looking at the charts, so we're going to look at the economic calendar as well. And today is a day of speeches. There are so many speeches coming from Europe. From the European Central Bank, coming from the Federal Reserve in America. There are so many speeches today, and just one report from Canada. So all these are very, very important, and they're going to help in the movement of these markets. The volatility hasn't been so much this week, and charts like, the gold, gold has been a bit sort of in a range. It hasn't really been moving so well, and that's good. It gives you some time to relax. People who trade gold, they are always on edge. But with a chart in some kind of a range, you can relax. You can relax a bit. This gold thing can really, it can drive you nuts. Then Brent Crude Oil is, it started climbing again, headed for the $120. But we already exhausted our energy, with our past announcements, that crude oil is now 110, now 120, now 130. We exhausted our energies, and we are back to, okay, it's 110, okay, it's 115, 120. It's now no more. So, as our young people say, it is what it is. So crude oil is back. Almost at $120, it might clock there, it might get there tomorrow. Right now it's about 118, 119. So if you're buying crude oil, you're making some good pips there, and you can convert that to your account based on your lot size, and you'll get your good amount of money there. Those pips are so many from where it was at $110, $120. That's a very big increment. So there are enough pips in that movement, and you can make some good money. Based on your lot size. So let's move straight to this economic calendar, and we see today's events. So what has just taken place is a speech from from the European Central Bank. So these days speeches are all very, very important. This one is Louis. The other names I will not mention, but Louis is the Vice President of the European Central Bank since 2018. So that speech is currently going on. 2 minutes into the speech, the market impact could be there on the charts. We're going to look at the chart as well. So we have that speech that is taking place right now. Market impact will follow. Then at around 4:10, 10 minutes past 4, there will be another speech also from the European Central Bank, and that is from Fabio Panetta. So that is another member of the European Central Bank Executive Board since January 2020. And so he was the senior deputy governor of the Bank of Italy before getting appointed to his current position in the European Central Bank. So this one is another, these events have medium impact shown in the graphics, but I can assure you that they are very, very important events. At 4:15 there will be another speech, this one by Christine Lagarde, who is the president of the European Central Bank. Now This one is a high impact speech, recognized for its high impact today. So at this time, 4:15, there will be that heavy impact on every chart that has the euro in it, or any chart that is related to the euro. So be on guard for that. Then later on at 5:30, there is a speech from the Federal Reserve. This one here is from John C. Williams. He's the president of the Federal Reserve Bank of New York. Yeah, so that's another speech. It will be at 5:30. And the impact will be, following all these other speeches, that the most impacted chart here will obviously be the Euro USD. Yeah, it might be sort of a cliche, but yeah, that's how it is. So, yes, that is another important speech. Do not take it lightly. Then at 6:15, there will be another one from the Deputy Governor for Financial Stability of the Bank of England. So that speech is from Sir John Cunliffe. Yeah, so that will be affecting the pound sterling. Yes, that will be at 6:15. So charts of interest are Euro USD, GBP USD, as well as all charts that have the euro, the US dollar, and the pound sterling within the pair. Then the last speech will be affecting the euro, and that will be still from the European Central Bank. That will be from Philip Richard Lane. He's an executive board member of the European Central Bank. So that speech will be at 9 in the night. Yeah, so this is very, very, all these events are quite important. We normally don't have so many speeches like this in this economic calendar, but those are how many speeches we have today. And given what's happening in Ukraine and Russia, in Europe as a whole, these speeches carry a lot of significance in the charts today. So just keep them in mind, mark your calendars and mark the time. Make sure you don't trade against the market impact of these speeches. Okay, so moving on to the charts, this is Brent Crude Oil, $117. That is the price right now. And the highest it has been today has been $118.97. So that's quite a good number of pips. Yeah, so the price from yesterday to right now, they are about 82 pips of Brent crude. Yeah, so about 82 pips. Let me look for the spread of this chart. So we have the ask line there. Can't really see it, maybe in a 1 minute chart. Okay, that's the ask line. Very few pips in there. If you're to buy or sell, your spread is about 4 MT4 points, which is quite, that is quite good for Brent crude oil. So, yeah, if you trade this chart, this is the right time to trade such charts, where there is so much exposed financial events, fundamental events affecting Ukraine and Russia. That's what is dictating the price movement of this chart, as well as some speeches from the President of the United States and so many other parties that are concerned. So that's what's moving these events, especially with Brent crude, so you can make very good analysis there without going very far. They are mostly political events that are affecting this chart, and you can benefit from that so well. So Brent crude oil, that is a chart of interest. The other chart is the Bitcoin. Yesterday it was about $40,000. If you look at the price change, so yesterday we had it at 41,000. The lowest was 40,298, and today there was a rise up to about 42,901, almost 43,000. So yeah, that's a price movement of Bitcoin. Maybe you can look at it in a more in a zoomed in chart, like a 15-minute chart. You've been looking at it in a daily chart, and Yeah, so for the benefit of those who do short-term analysis, I've been doing a lot of this long-term analysis with daily charts, weekly charts. Yeah, but we can, we can switch gears, and then we start putting in some kinds of trades. Yeah, so this is a 15-minute chart. Yeah. Now, Fibonacci funds for scalping, I think we shall look at the 1 hour chart first. If you're a scalper, you need to understand that doing very strong analysis on a very small time frame might not be very effective. But if you have a strong analysis in a bigger time frame, like the 1 hour chart, which can give you good market movement, then you can follow up in the smaller charts. Let me show you how. So here I'm going to apply the Fibonacci funds. And I'm not going to apply them the way I have been applying them previously. This is another method that, yeah, it also works for long-term trades and scalping as well. You can do some practice with it and see how fast you can cope up with this. So anyway, so this chart, we have this downward movement starting to form. This is the Euro USD. Yeah, so this movement is starting to form with this on this 1 hour chart. So I'm going to take the topmost, the very top of where it started trending downwards, which is an obvious point, and I'm going to take the very first bottom. Yeah, so that V shape gives you the first bottom, and that's where I'm going to apply the funds from this top to this bottom in the 1 hour time frame. And okay, so that's what it looks like. So from the very top to the first, to this first bottom, be very mindful of that. It's this one is a constant area. It is obvious, but the very first bottom, it must also be obvious, but do not just pick any bottom that you want. So after applying that, this is what we have. So we basically have 3 channels of price movement. We have the 38.2, the 50.0, and the 61.8. So you realize that this 38.2 is moving from the top, and it has all the tops touching it. Then this is where the breakout point is. So price comes from this very bottom, breaks the 38.2 and tests it somewhere there as it is being resisted by the 50.0, and price keeps on moving in that direction, and we have it breaking out again at the 61.8 and now moving along those lines there. So here are points of entry. This one is a range. Yeah, this one is a range, so you might not really take it seriously. And this one protruding out might, it might also scare you. The price might continue moving. But then this one is a nice resistance where you can sell, and after getting that resistance, you have about 30 pips minimum in there. And there's another point here for selling. So in the 1 hour time frame, you basically have one sell trade. A very nice resistance there and a very nice support there. And the rest of these might really scare you away. So you can use those same levels in these. Now this is a 30-minute chart. Yeah, same. For those who don't analyze, different time frames. The time frames are not different charts. It's the same price movement, just looking at it in different time zones. So this 30-minute chart, maybe you can have more. You can have some more areas to enter. So when you're scalping, everything is on the line. You have a doji there, a very nice doji that gives you a sell. So here there's already one other trade coming from the doji. That's a good break from the top, moving into this 60 61.8. Yeah, so you have a perfect break there. If you catch it late, that one you could have got about 14 pips. Then after this doji, there is another about 16, a maximum of about 19. Yeah, but you can take about 15 pips in there. Then you have a very good resistance there. If you see it in a smaller time frame, it's more perfect than what we saw in the 1 hour chart. So with that one, there is a good 32 pips, and yeah, we don't really have a resistance there. Not anything protruding touching these Fibonacci funds that we have. Yeah, so in the 30-minute chart, there are a few trades compared to the 1 hour chart where there was just one trade. Yeah, so now we move further into the 15-minute chart, yeah, and see how it all happened. Now for this 15-minute chart, the first good area of this here is a perfect break at the 38.2. Yeah, the very first break into these Fibonacci funds. Okay, I think we can take our, we can somehow maximize the bottom there. Let me get the top very well. Okay. So we have this first very nice break of these funds, and price moves up here. As in, yeah, it's a real, it's a real ranging market. Yeah, very nice ranging market, which you can follow. It is ranging, but in a bearish way. Yeah, so this one here ranges up to. Okay, something has changed here, but that's okay anyway. Yeah, so it ranges all through to this 61.8, where there's a lot of resistance. And yeah, so if we add another fund, I'm supposed to do this in the settings and have some very good number of funds there. So yeah, so after adding another fund, you have to have some equal distance between all these lines. For every other fund that you add, you need to have what looks like an equal distance there, so that yeah, so that you're still within range. Yeah. So so with these funds, you have good resistance up there, and you can see how the price keeps on bouncing off. So for the smaller time frames, you can get another fund that just breaks, that is just in between this top and this bottom, and you have more areas of significance to get your resistance and support levels. So let's take this into an even smaller time frame. This one is a 5-minute chart. Yeah, sometimes trading these small charts is it's really crazy. You can feel like you're really crazy. But yeah, so the 5-minute chart is taking a little bit long to update it to the current price. Let's take a look at the USD JPY, yeah, in the 1 hour chart. So every chart that is every currency pair that is trading against the Japanese yen, for some reason it's it's moving upwards. It's really moving upwards, and yeah, we can get some good areas to to put our theories on. Yeah, so looking at this very steep upward movement, okay, we don't really have an area of this one here is very steep. We don't really have the first the first top. Yeah, maybe it doesn't really. Yeah, maybe the very first top could have been. Let me zoom this in a little bit. Let me zoom this in so that we get an exact point. So the the bottom was down there, and the very first top was, okay, we have this one. Yeah, so we can take this top and we look at the market impact on that. And okay, so the very first stop is, it's inside there. Yeah, it's a 1 hour chart, and we have a very, very steep upward movement. So we have, price, it still respects these levels, and I think this one is it's a better representation using the funds. And the other one is, it's very good, but very good for the long-term traders, and for the short-term traders, this method works as well. So I think let's do it again step by step, so that so that it makes more sense. So this is the very bottom. We're looking for the point that we started having this rise, and the market was in some kind of a range. As you can see it's neither upward or downwards, but from this point we have a real trend forming. So that is the very bottom of the trend where it began. So we zoom in to that bottom, and we look for the first high, the first highest point that gives you that V shape. So this qualifies. So we have point A. This one qualifies well. Then we have point B. This point B has a real high, that has formed there. This one, this one gives you a new low. It gives you another low point. So maybe we take this point. The first one I taken was that, but let me take this one, and we see, analysis can sometimes be a little bit messy. So we're going to the very top there. So after putting that there, it has to have significant levels. We can't just force it to work. Okay, so so based on these ones, that is a price movement that we have. So let me add the other one as well. Let's make this really messy and see how we see how significant these events will be. So I'm going to add the other funds for this that first top. So I'm taking it from the bottom to that very first top, and so this one is good. It's not messy at all. It's not messy at all. It's actually very nice. So this 38.2. So we have two funds there. We have fund number one moving to this the first top, point A, and the second fund moving to point B. But the 38.2 level is already highlighting point B. It's already moving through in a very, very nice way. It is extremely significant. That is a very good site. So we have all these funds. They really give us a good representation of price movement in this USD JPY. And this is one good way of tracking the movement of this this chart that is just moving upwards into some uncharted areas where there is no the previous resistance levels are quite they are quite fine, but this one gives us a good representation of what price is moving within. So we have this first area of support. So all these lines represent resistance and support. And so they are being projected from these very first movements of price in this trend. So the significant levels were that point of resistance where there was a clean break, and prices have been moving, very close to this line. If you look at that line at the very center, there are these two lines, and then there are these two lines down here. Then that one in the center is sort of a split line. If you look at it in its thickness, there are two lines in one. Yeah, you can see how there are two lines that are spread within there, and yes, that's a very strong area in this in this equation, and price is moving along those lines. So we have price being supported there, breaking there, testing, breaking up there. It keeps on breaking up and below. Here it serves as a good point of resistance. Then at this very far point, we have a break. Yeah, and that's where we are right now with the USD JPY. This area has just been broken, and there is very good support there for the price. So it's very significant. So as prices keep on climbing, yeah, you can look out for mid areas. You can draw your mid points within there. For example, now that we're in this, in that very nice area there, yeah, we can have a medium. Must have equal distance between that one and this one. So here we can look forward. If price continues really moving, it has been very bullish. If it continues moving in that bullish format, then we can look out for that blue line. That can be an area of resistance that will give us some breaks. It will pump our brakes automatically as we trade upwards. But then at the same time, if this price breaks below this area here, we might continue having some bullish movement. But one thing to really be cautious of is if price breaks below, then we must have strength moving to the very bottom. You can look at all the areas where you buy. You have strength coming from this 50 mark. Yeah, that has given us the good buy, and now we're in a very overbought position. So buying here is a bit risky. Yeah, it's a bit risky on this USD JPY because we're really overbought. So these are other good low points to buy from. Upward trend. This RSI below 50. It's a good area to buy. This one as well, another good area to buy. And this one as well, another good area to buy. Then, a lot of, there's a lot of movement in this overbought position. Maybe for this RSI, I could mark out the area that is, I think from 50 to 70, they're about 20. They're about 20 points between all these. 30 to 50, that is 20, 50 to 70. So if we were to add another level, we add 90. Yeah, we add the level 90 so that we keep it within the sequence. So level 90 is our extreme area of an overbought position on this. Then below there we have level 10. Between the 30 and 0, there's level 10. So that is our new RSI. We now have 4 levels. We now have 5 levels: 10, 30, 50, 70, and 90. Yeah, so these are going to guide us. So when we reach 90, that is really overbought. 10 is really oversold. Yeah. So this price movement might skip between 90 and 70, the way it did here with a lot of upward movement. And yeah, that can be a bit extreme on the technical side, but you can follow that up, and if you're very brave, you can make some money there. So when price is really overbought, anything can happen up there. Price might bounce back. Anything can happen. But one thing we're sure of is picking it from the bottom. Yeah, once we have a small bottom there with strength reducing, we can pick it from there and get some pips moving upwards. That is very obvious. So, okay, that's for the USD JPY. I haven't really taken it into the 15-minute chart and the 5-minute chart, but yeah, this one is a good chart to keep on looking at least until this week ends. We have to look at this chart every day and see how this USD JPY is going to move upwards in that, in this market. Yeah, it's really, really overbought. The prices are above so many areas of resistance, and it's a chart of interest. Yeah, so let's take a look at this GBP USD. We're going to use the same analysis of the funds. I'm removing the period separators. Yeah, so here we have some kind of a range market in the 1 hour time frame and 4 hour time frame as well. It's a range market. Yeah, so now we have the 30 minutes time frame, and not a good time frame for scalpers. Yeah, but let's take a look at some smaller time frames as these charts load. That is 15 minutes and 5 minutes. The favorite for scalpers. Now the best thing to do here is to get a trend that has just begun. Yeah, even if it is not so, even if it hasn't taken so much, but we need to get a beginning trend. And so in this 5 minute chart, if you look at the RSI, we have some good divergence. Yeah, coming from below the 30, almost near this 10 mark. So we have some good divergence moving like that and like that. So that gives us some kind of, trend moving upwards. This could be a point of reversal. Yeah. So in these bigger time frames, it's a range market. Yeah. The 4 hour chart, it's just a range market. Maybe we shall have a few candlesticks moving upwards. Maybe. Yeah. Those few candlesticks will just be about 5 or 3 in the 4 hour chart, but in the 5 minute chart, it will be an entire trend. So looking at how the price is moving, the RSI, looking at these low points, there are 2 areas of take profit. This is the lowest point, and now we have many points that are touching that low area, but the tops in the price, we have 2. Yeah, so this is the first top, that one, first take profit has been taken. Then this one is the second top. Yeah, that's a second take profit right there. So the pips in between here, they're about 16 pips and about 16 pips there. So you have some equal distance in this slot. And we looked at that some time back. Every time you look at the take profit levels, take profit 1, take profit 2, you normally have an equal distance between all those levels, which is something very important to always check. Just check it just for fun. It's really nice when you see some mathematical levels like that. So now this might be our first high point that gives us that inverted V shape. Yeah, so we might have this first high point. We have a few more candlesticks moving downwards in that 5 minute chart. We might have what looks like a low down there, which is good. So if this is our first V shape, I'm going to apply these funds from the very bottom. Yeah, so I'll zoom that in to the very bottom there and take those funds to the top there. Yeah, so so that is the earliest point of that trend. So we already have price, somehow respecting these levels. It could be a coincidence, it could be anything, but what we're looking for is in the future. Yeah. So we look at the 4 hour chart and we assume that we're in a range market and the top is somewhere there in this 4 hour chart. Actually, the current top is around there, and we shouldn't really expect much moving upwards there. So we mark that off, so that when we come back into the come back into this 5-minute chart, we expect the very top of the trend to be somewhere there. If we actually have this trend moving, so we have drawn the funds from here to direct the price movement to that top. So if we get another top there for this Fibonacci funds, then we shall have more funds there giving us a direction for the support and resistance. And assuming that this is a real reversal, then it's a reversal from this trend, this short-term trend, and we need to have some levels there to guide us as well. So these levels are the Fibonacci retracement levels. So here we have the 23.6, 23.6, which price just touched. If the perfect break there, and then price has touched it, so that level has already taken its profit from this Fibonacci retracement levels. So now we're looking forward to the 38.2 level, and so if you look at it, it's within the same range with this higher top. Let me zoom this in a little, zoom it out a little bit. So we had the first take profits, this first one, which was 16 pips from the bottom to where it is. Then another take profit, which is another 16 pips to this 38.2 level. They are all inside there. So we're very, very, it's very likely that this price could hit that level. It's very likely, technically, price could get there. And if it does, the line will be about 16 pips anyway. About 16 pips anyway. There isn't much to calculate there. So the areas left will be the 50.0 and the 61.8. So above that will be the point that, slightly above that 61.8. Slightly above that 61.8 is the level that we highlighted in the 4-hour chart. That that could be the farthest we could go. So 61.8 is normally the danger zone for the, for these Fibonacci retracement levels. Once you get there, you might not have more strength moving further beyond. So here it is safely below that point of support that we saw on the 4-hour chart. That one that we marked above there. So this is a scalping strategy anyway. Scalping this GBP USD chart. So if we have upward movement, these are all the levels that are going to respect. The most obvious level has already been hit off this divergence. It has already been hit, about 16 pips. The secondary area, which is the highest point, still within the divergence. It lays there with a 38.2. That's a very nice coincidence. All these things meeting together. So that one, if we hit that point, we have another 16 pips to that 38.2, which is quite, it's good. And being a 5-minute chart, it may not take a lot of time. It might not delay. It might not delay any much. So once price breaks this 23.6 level, it may be very obvious that we shall be moving upwards to that 38.2. So I think that's the last chart for today. So for the scalpers, you can apply these strategies. I think I'll find ways of making it a little bit simpler. But it's good to have so many levels in there that you can look at, so that when price is not moving beyond a certain point, you know exactly how significant it is. If you don't know how significant the high point in this divergence is, the 38.2 could give you more significance, that you have a high point here, and the Fibonacci retracement levels also mark it out as a point of significance in the resistance of the price. So that will, it will give you more understanding of why your profit is not moving beyond that point. And if you're very careful about it, you might then close your trade because that is a take profit point. You might close your trade there, take your profit, and not waste any time. Because if you stay in too long, the significance of that point might push price back below. And with all these other events that are taking place today, all those speeches, things could move either way, but you could definitely get a small profit there. 16 pips is very nice. That is about 160 points. Yeah, with a 0.01 lot size, you can get about $1.6. With a 0.1 lot size, about $16. Yeah, with a bigger lot size, you can make a lot more money there, which is significant for what you need to buy in our economy here. So yeah, so that's another way of using the funds. You can use them to really help you move price upwards, especially like what we have just seen in the USD JPY case. These funds, they are like rays. They just move throughout the chart, so they can give you some good guidance as price moves in areas that you didn't really expect it to move without being resisted. So that can give you some very good guidance for as long as it takes. And when it is resisted, then those same areas will give you good support in the future, where you should put your stop loss and where you should put your take profit. And yeah, when it hits a few of those levels, you will understand and that it's now moving downwards, and you will be very cautious as you trade in that market. Yeah, so I think that's it for today. Thank you for watching. Have a good day. Goodbye.